And in our top business story, the DFM General Index, which was up 113% last year on the prospects of the MSCI upgrade of the UAE to emerging market status, fell 5.5% to 4,856 points on Monday, its lowest close in a month and biggest one-day loss since August 27. Analysts quoted in local reports described the decline as an inevitable correction after gaining 55% so far this year. The drop made DFM the worst performer among more than 90 benchmarks tracked by Bloomberg globally. Market analysts did not rule out a further fall as across the Middle East several bourses retreated. Monday's decline trimmed the DFM's 2014 gains to 44.1% as 18 stocks fell by more than 5%. EMA dropped the most since September 3 to 9.7 dirhams, trimming its advance this year to 40%. DR declined to 1 dirhams 31 and Union Properties dropped to 2 dirhams 15. The MSCI, whose gauges are tracked by investors managing about $8 trillion in assets, on May 14 named companies from the UAE and Qatar, including EMA, to its developing markets gauge. The DFM has now declined for 4 straight sessions, its biggest losing streak in that surge. The drop came in the wake of the MSCI adding 9 stocks from the UAE and 10 stocks from Qatar to its emerging market index last week. Global Islamic banking assets with commercial banks are on course to exceed $3.4 trillion by 2018, fueled by growing economic activity in core Islamic finance markets, according to specialists at Ernst & Young. Its Global Islamic Banking Center said across the 6 markets of Qatar, Indonesia, Saudi Arabia, Malaysia, UAE and Turkey, the combined profits of Islamic banks broke the $10 billion mark for the first time at the end of 2013. If the current growth rate continues, the Islamic banking profit pool across these markets is set to exceed $25 billion by 2018. Ernst & Young stated that there is significant growth potential for the industry, with an estimated 38 million customers who bank with Islamic retail banks globally, but only a small number of these customers have fully transitioned from a traditional to an Islamic banking relationship. The average number of Islamic banking products per customer is just over 2, whereas leading traditional banks, according to Ernst & Young, have an average of 5 products per customer. Globalization and the increasing market share of Far Eastern countries in the GCC mega projects topped the agenda at the 2-day EPC Expert Forum, which focused on the opportunities and challenges in the regional infrastructure development industry. Being held under the theme Turnkey Projects in the Gulf States, more than 100 industry leaders, contractors and experts gathered at the forum, which discussed the current and future trends related to the engineering, procurement and construction projects in the region. Organized by AHK, the German Emirati Joint Council for Industry and Commerce in Dubai, the forum focused on the challenges the European firms have been facing by the Chinese and Korean competitors, particularly in the plant manufacturing industry. Panelists at the forum estimated that due to the large-scale upcoming construction projects in the region, such as Etihad Rail and Saudi Arabia's rail and metro development, have valued the infrastructure development industry at over $1 trillion. It was further highlighted that the German companies still hold a 15% market share for EPC and turnkey projects in the region. According to senior officials, operational efficiencies and increasing the presence for German firms remains paramount in overcoming the challenges from European Eastern markets.
Improve what we say the EPC competence of the companies by streamlining their internal processes, by stressing very much the fact that the life cycle, the quality should prevail also, not only the price. And we see also a trend, I think, recently that some of those successful bidders over the last years, they had hefty losses. So I think there is also a kind of reconsideration. So it's a good time for all companies to streamline their processes, their project management, their technology, and to make new partners.
German companies are extremely interested in this region. The UAE is the most important economic partner for Germany in the whole region. Saudi Arabia is on number 2. And the government, the embassy, myself, we want to enhance this cooperation. In this conference, I'm very glad is all about this. I just made a little statement saying being present for a German company here is most important. What we should do is for big infrastructure projects like metro, railways, a German offer. a German consortium, more German companies coming together. There we are still weak, and we have to work on this. We succeeded already to establish Deutsche Bahn, German Railway, as the joint venture partner for Etihad Rail, and we want to continue and build on this for future railway projects.
Etihad Airways has further increased its stake in Virgin Australia, according to a statement on the Australian Securities Exchange. The announcement said that the voting power of Abu Dhabi-based Etihad has increased to 21.24% from 19.9%. Etihad, which originally owned 9%, has been buying up Virgin shares on the ASX and has more than doubled its stake in October last year. Virgin Australia is owned by Etihad, Air New Zealand and Singapore Airlines, and all three shareholders are expected to have board representation from July. In January, Etihad's chief executive, James Hogan, confirmed he will personally take up a seat on the board of Virgin Australia. Virgin offered Etihad and its other significant shareholders, Air New Zealand and Singapore Airlines, a board seat each after they injected $350 million into the Australian carrier as part of a capital-raising exercise late last year. Etihad and Virgin Australia fly 28 times a week from Australia to Abu Dhabi, which will increase to 35 flights in July when Etihad launches a daily service to Perth.